Welcome back to another weekly market breakdown. And as always, if you are new to the channel, a sub would be appreciated as I do provide valuable educational content on a daily basis. And if you like the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. So last week we focused on the euro pairs because we had some positive PMI data, and almost everything that we spoke about last week for the euro had gone as anticipated. This week we will be shifting our attention to the US dollar pairs because as we can see that the NFP showed a surprisingly powerful gain of 460,000 in January despite the Omicron surge. Yes, ladies and gentlemen, the US added 46,000 in January, which is good for the dollar. So we're going to look for some good buying opportunities on the US dollar. Now we're going to start with the dollar index and then work our way up. Starting on the monthly time frame, I think it's as clear as daylight that the market is currently testing a very strong level of support at the moment. So definitely expected moves to the upside expected. The market also printed this impulse correction and you expect the next correction. Also, if you take your Fibonacci there from the low to the high of this impulse that we had over here, just to get a indication of where the target level should be, we can see that the minus 27 is lining up perfectly with this structure that we have over there. So there's a good opportunity for the market to go and hit that minus 27 from a monthly perspective. Here on the weekly time frame, what do we have? Now from a weekly perspective, we can see how the dollar was quite bearish last week. The market had also printed this previous structure that we had over here as well. So the market printed that structure, just rejected this level over here. In doing so, the market then printed this inverted head and shoulders pattern from a weekly perspective, which is considered a bullish pattern in the market. Now from a daily perspective, we can firstly see how the market had broken below this strong level of support, and all of that support is now tested as resistance. One thing to keep in mind is the market had printed this massive impulse, and after an impulse you expect a correction to at least a 0.382, and if you take your Fibonacci there from the high to the low, we can see over here how the 0.382 is lining up with this structure slightly above the previous structure. So going into next week, no doubt that we can expect the dollar to show some strength. So this move to the upside is definitely expected till there. From there we could see a pullback in the market before we see the continuation happen purely based of this structure that we had here as well. Now I don't trade the US dollar index as a standalone. I always trade any currency pair that trades either against or with the dollar. Now going over to the USD CAD, starting here on the monthly time frame, what do we have? Let me just release that. Starting on the monthly time frame, it's as clear as daylight. The market is currently testing strong level of resistance. Now I spoke about the market when the market was sitting at this level, and I explained all of the reasons why we saw the pullback before the continuation, and you can just refer back to a previous video that I've made. The market also printed this candle with a long wick, and we always expect the market to go and fill in that wick, and after the data that we receive now, there's a good opportunity for the market to go and fill in that wick there as well. From a weekly perspective, what do we see? From a weekly perspective, we can see how the market printed this level of support, broken, testing it as resistance, market broke above that, resistance got broken, and the market is currently testing that resistance as support once again. Now from a daily perspective, what do we have? Now you're on the daily time frame, it's even as clear as daylight. So from a daily perspective, the market is currently testing this strong structural level. Going into next week, we can definitely expect to break above that level before the continuation and see the market bring 10 equal high, potentially going higher there as well. USD JPY, starting here on the monthly time frame. Now I've done a breakdown on this before, but I will just go through it again. From a monthly time frame, we can clearly see how the market is still trading above the strong level of resistance. We also saw the market had printed this impulse correction, and we want to trade the next impulse. Taking the Fibonacci there from the low to the high, we can see how the market tested and rejected the 38.2. I can see how the minus 27, which is the first Fibonacci target level, is lining up perfectly with that structure, which gives us an indication the upward momentum is definitely expected. From a weekly perspective, we can see how the market is currently trading above the strong level of resistance, got broken, became support, support didn't hold, support became resistance. The market broke above that resistance, and all of that resistance is once again being tested as support. Now here from a daily perspective. Now I spoke about this market when the market was sitting at this level, and I said that the market had printed this W formation. After W formation, you expect a pullback to the neckline before the continuation, and that is exactly what the market had done. Now going into next week, we can definitely expect the market to continue this move to the upside, because if we take your Fibonacci there from the high, from the low to the high, the market rejected the 0.382, and the first Fibonacci level target, which is the minus 27, is lining up perfectly with that previous high that we had over there. We can also see here the market is currently testing this structure, but based on the data that we received, we shouldn't have any problem. Now over here we've got the Euro USD, which I spoke about last week. The Bank of England firstly came out. They gave us the data that we were looking for. The market, as we can see, is now trading above this strong level of resistance. And as always, once the market breaks resistance, it becomes support. We can see here from a weekly perspective, the market is testing strong level of resistance. The market printed this massive green candle, so definitely a pullback expected. Potentially for the market to print this inverted head and shoulders, maybe get a pullback to that level before the continuation to the upside. From a daily perspective, what do we have? Now from the daily time frame, the market printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci there from the low to the high, and we can see how the 0.382 is lining up perfectly with this previous level of resistance that got broken and is now turned support. Going into next week, we can definitely expect the pullback in the Euro USD before the market go and continue higher to go and test that previous structural level that we have there in the market. Next up, we've got GBP USD, starting on the monthly time frame. What do we have? From a monthly perspective, we can clearly see how GBP USD is testing very strong level of resistance. The market acted here as level of support. Support got broken, became resistance. The market tested this level of resistance multiple times, and with the positive NFP data, definitely a move downward expected. Now here on the daily time frame, what do we have? Now from a daily perspective, we can see how last week the market had tested and rejected this previous level of support that got broken, and it's being tested as resistance. Excuse me. Now on the daily time frame, what do we have? Now from a daily perspective, we can see how the market is testing this structure that I created over here. This level over here acted as a level of resistance. Market broke above that, came back, tested as support. But according to the positive data that we have for the US dollar, we can definitely expect the market to, going into next week, break below this level, come back for the retest, and then potentially continue lower to go and test that level over there. Also, just keep in mind with Euro USD and GBP USD, the Bank of England had given us the 0.25 BPS as we expected. So there's a good opportunity that the GBP USD might continue higher from this level. So we will wait and see how the market reacts going into next week as well. So we have positive data for the US dollar, and we have positive data for the GBP as well. Now USD CHF from a monthly perspective, we can see how the market had printed this W formation. After W formation, you expect to pull back to the neckline, which is exactly what the market has given us. The market is also testing this level of resistance as support quite aggressively, again giving us the confirmation that the continuation to the upside is expected. From a weekly perspective, what do we have? From a weekly perspective, we can firstly see how the market is stuck within this consolidation. So a good opportunity for the market to go and hit that consolidation phase before maybe continuing lower. Alternatively, we could see the market break out of that level there as well. From a daily perspective, we can see how the market printed this W formation, came back, tested the neckline, definitely continuation expected. Market also printed this massive impulse. After an impulse, you expect a correction. Now we can see if we take a Fibonacci there from the low to the high, we had a pullback to the 61.8, aka the golden ratio. I can see how the minus 27 is lining up perfectly. Well, not perfectly, but very closely to this previous structure. Going into next week, once again, ladies and gentlemen, we could see the US dollar. Wow, we could see that US dollar continue this momentum to the upside. Next in line, we've got the Nasdaq 100 starting on the monthly time frame. Firstly, the Nasdaq is still testing this very strong level of support. The market first printed this level of resistance here, broken above that, came to test it as support, and then tested this previous level of support on the previous structure that the market had created as well. From a weekly perspective, what do we have? From a weekly perspective, the market printed the same formation, came back, tested the neckline. The pullback is highly expected from the Nasdaq. Now on the daily time frame, what do we have? Now from a daily perspective, we can see how the market printed this level of resistance. Now when the market was trading at this level, I explained all of the reasons for why we're waiting for the breakout and the retest before the continuation. And you can always refer back to the previous video that I've made. Now the Nasdaq, from where it is now, we could potentially see the market move higher. If you take our Fibonacci there from the low to the high after the impulse, we could potentially see the Nasdaq go and test and get a deeper pullback before we see the market start moving to the downside. However, if the market gives us an indication with a clear daily break below this level, then we can definitely start looking for selling opportunities. But from where we are sitting now, there's quite bullish momentum expected in the short term, but it doesn't mean that it is going to happen, because we know as traders we have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment. Now this was also a breakdown that I've done on the US S&P 500 on the Instagram. So we've got the same type of price action here, break, retest. Alternatively, if the market breaks below that, we can definitely expect a pullback for the continuation to the downside. You'll see that the price action for the Dow Jones is also the same, because they all look basically the same. But we can definitely expect the Dow Jones to be positive this week, because the dollar was quite positive. Taking our Fibonacci there from the low to the high, firstly, the market is currently testing that level of support. Two ways. First way, definitely to see this market go and test that level from where it is now as well. I'm not going to give the second option because I don't think it's likely to happen for the Dow Jones. So that's the breakdown that we are going to look at trading for this week, guys. And as always, thank you so much for your time. Cheers for ears.